In this episode, we speak with Brett Hickey, founder and CEO of Star Mountain Capital, a specialized U.S. lower middle market asset management firm. Founded in 2010, Star Mountain focuses on providing debt and equity capital to establish, growing small and medium-sized businesses, as well as acquiring LP interests in lower middle market funds, often at a discount. Star Mountain manages approximately $4.5 billion in assets under management and has completed more than 350 direct investments and over 40 secondary or fund investments since its inception. The firm is 100% employee-owned, with more than 100 team members and senior advisors sharing in the firm's investment profits. Brett founded Star Mountain after previously co-founding and serving as president of a multi-manager platform that included 4 U.S. state-sponsored small business investment funds. Earlier in his career, he worked as an investment banker at Citigroup Global Markets, advising leading asset managers and financial institutions on more than $8 billion in completed transactions. Star Mountain was recognized as a top private credit firm of 2025 by GrowthCap. I'm your host, RJ Lumba. We hope you enjoyed the show. If you liked the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Brett, thanks so much for taking the time. Look forward to chatting today.
My pleasure.
First off, I was taking a look at your LinkedIn posts, and it looks like you got some snow. Wherever you were on the ski mountains, there was not a lot of snow going around, so you were in a special place.
Yeah, well, I guess the good news about Utah is bad snow is still not too bad. I like to joke and say we made some fireworks on New Year's, not the good way, but due to our skis hitting a bunch of little rocks, but it was still fun. And for my youngest kids, it's still plenty for them.
Yeah. Out in Park City, Deer Valley.
Deer Valley, yeah.
Awesome. Great spot.
Typically reliable snow. This was a pretty low year, but still got out there, had fun, make the best of it. All good learning experiences for kids. Not always rainbows and butterflies.
We'll talk more about winter sports because I know you were a medalist in a certain sport. We'll hit that later. Leave that for the audience to try to figure out for now. Let's start with Star Mountain, and you do a variety of ways you invest. So maybe we'll set the stage that way for our audience so they know what Star Mountain does.
Sure. So we manage almost $5 billion of capital as an independent firm. We have no outside shareholders. It's a company I started 15 years ago. I share the profits with 100% of my team, which is about 130 full-time people and 40 operating partners. We invest exclusively in the U.S. lower middle market. Our objective is to really understand the challenges and the opportunities for private business owners that generally have between about 5 million and 50 million of EBITDA, and really have developed a specialized platform to find these businesses, analyze them, and then help them grow. To be a solutions-based investor with them, we've built industry vertical expertise and have people local in over 20 cities across the US. We also have different products to fit. Lending products, lending with some minority equity, controlled private equity, and then we also have a secondaries fund where we're purchasing portfolios of loans and private equity investments as well as individual ones. And so ultimately, having a very comprehensive yet focused platform on the lower middle market, we think gives us better data, resources, and relationships to really help try to optimize value for both our investors and the businesses we're investing with.
Mm-hmm. And I'm curious, when you were starting out, was that the vision to have a variety of solutions rather than just say, we're going to be a lender or we're going to be in private equity, because there's always opportunities to do a lot of different things. And curious why you decided to do kind of this broader set of investing.
It's a few fold, and I really go back to a few key learnings. I was very fortunate in the early part of my career working at Citigroup, then Sullivan Barney, which at the time was the largest financial services firm in the world, working in New York doing investment banking work, mergers and acquisitions, as well as capital formation and strategy for predominantly asset managers and insurance companies, and to a lesser extent, banks within the financial institutions group. Within there, I get to see a lot of things that had been working, not working, and really trying to understand why, and take a little bit of a look as a Canadian, of course, remiss not to say where the puck is going and give a little Wayne Gretzky quote there, but to really understand, well, where are people heading and where does that create challenges and where does that create opportunities? Because the past is obvious. The key is, where are the opportunities in the future? And what I saw a lot of asset management firms do was grow and scale, which I think is important because it comes down to talent as a really critical part of this business. We're a very people driven business, and you want to attract, retain, and motivate the best talent. To do that, you need to have a growing firm in general. You got to have a great culture, a whole bunch of other things, but you've got to grow so people see career growth, are motivated by career growth, motivated by enhancing their economics and livelihoods every year. What happens often with asset management firms, they'll create a great track record with a fund or two, and then they'll raise a much bigger fund, and then they'll end up going up market with that fund. The problem with that in today's day and age, which is different than 20 years ago. 20 years ago, there was a lot more white space. Today, you go up market and the world is extremely competitive. So I don't believe that Surmount adds value into that market, and we're not trying to compete in an area where we don't think we have differentiated value to bring to our investors, our business owners, or our team. And so what we design as a model is to grow more horizontally versus going up. That enables us to stay in a market environment that's less competitive, has more inefficiencies, also has that valuation arbitrage of growing companies from the lower middle market to the middle market. So we retain those positive supply demand characteristics. And what it enables us to do is just get smarter and better at everything we're doing, staying, within our marketplace. It has challenges, as does every strategy. And our challenges are making sure that everything's very organized, very process procedure driven, and so forth. And so we're very heavy investors in technology, and in the category of luck, artificial intelligence and AI has really allowed us to accelerate how we do everything we do, because you've got a market with roughly 50% of US GDP, hundreds of thousands of private businesses, a lot of complexity, a lot of data, a lot of information. Because we have built such a unified technology platform and system, which we built in a proprietary capacity, we've been able to overlay artificial intelligence into a lot of different workflows. So I'd love to tell you, RJ, that I knew this was coming and this is why I'm doing it. This is totally the fact that I'm a quarter Irish, I guess. It kicks in every once in a while and got lucky on that front. But the technology really allows us to have better data, better insights, better resources to better find, evaluate, and grow businesses. And ultimately, we're in the business of generating returns for our investors, and that ultimately helps us generate better returns.
So yeah, speaking of returns for investors, from an LP perspective, when they're looking at your firm versus, say, another alternative asset manager, they look at you and say, like, this is really interesting because they stay focused on the lower middle market, but they play in two ways, both direct investment and investing in other managers. And so if, for example, there's a time in the cycle where maybe direct investments aren't performing as well, you could have had like maybe an offsetting or a hedging mechanism there on the investing in other fund side. Do you tend to look at it that way and try to balance like between the two strategies?
We do, and I guess you probably break it a little bit more to three, because I think there's private lending in the worlds of credit, there's private equity, and then there's secondaries, within both. So if you look at that, I think that in different parts of the economic cycle, you're going to have strategies that are more and less compelling.
Right.
And by having a set of strategies, I think you can be more discerning in how you invest and be a better investor and generate better returns ultimately for our investors. What it also enables us to do is be a solutions-based investor for our investors. We can sit down and say, talk to us about what you're trying to achieve, what are your needs, what are your challenges, what's your current portfolio look like, and how can we overlay the less correlated aspect of the lower middle market. If you think about today's day and age where people are highly concentrated into big tech, which continues to roar and have a lot of good value, but certainly increases the tail risk, as we look at most people's portfolios being more concentrated, certainly in the public markets than ever in history. What does that do if there is an '01 event, if there is an '08 type of an event? How does my portfolio perform? The service-based businesses and other companies that we have in the lower middle market, such as a pet hotel boarding and grooming business or a specialized school bus transportation company, if you ask yourself, well, how does an '01 NVIDIA and other tech stocks drop? Are kids still going to go to school? We think so. Now, when tech roars, does that mean there's more kids going to school? No, but it means that, if tech drops, also has, less correlation. And so building more diversified portfolios, that is one of our core objectives, is to really be a complement to an investor's portfolio. So when you think about your public market portfolio or your investments with the KKRs and Blackstones of the world and so forth and Blue Owls, how do we complement your portfolio across credit, private equity, and secondaries? And then also, how do we design the amount of yield you want, or if you're a taxable investor, the tax advantage aspects that we can generate from the lower middle market and some of the tax regimes, especially given the new qualified small business tax update that happened in July last year, once again in the category of luck. But there's a lot of different things that we can look to optimize. And so when we understand the outcomes that an investor wants, we can go across our strategies and structures to best help develop solutions to give you that output. Because I've always said, RJ, investing is about the outcome you're trying to achieve. It's not about, well, here's what my strategy is. Well, that's great, but I think people should invest with purpose. And is your purpose capital protection, cash yield, long-term capital appreciation, after-tax returns, portfolio diversification, total return, whatever the objectives are, which generally fall within those bands, what best achieves what you want for where you're at in your life, whether you're a pension, insurance company, or an individual.
Love the mention of the pet related business. I think people will spend on their pets regardless of anything that's happening in their lives. Spend so much on my dog.
Yeah, been some good investments for us.
Yeah, I mean, they're emotional beings, lovable creatures that you always want to give to. Talk to me about starting Star Mountain Capital, because you did it fairly early in your career. So, what gave you the confidence to kind of embark on this? It's not typical, I'd say, that you find someone that grew up in investment banking and, maybe was working in finance and investing related roles that you then embark on your own. I mean, it happens, but it's not typical, I would say.
It's a few factors. One is, if you're tracing back, I guess with 3 kids, I was trying to look at what are things from my past that influenced my future, my behavior, and so forth. And I'm still trying to figure it out. And I presume I always will be, both for myself and my kids. But when I look at my history growing up, I've always been pretty entrepreneurial. So it's not being financially relevant, but in high school, I was trying to honor my mother who'd passed of cancer when I was 6 by starting up a little clothing distribution business. So there was an empty little classroom type of thing in the school. And I went to the principal and I said, hey, look, this is empty. Could I make this a little place where I sell clothes from? It's part of this class we're doing around entrepreneurship. And can't remember exactly how I got him to a yes, but I inevitably got him to a yes. And then I went to a little clothing company and said, hey, could you kind of front me a little bit of clothes? It wasn't a lot, but anyways, we're just kind of selling clothes. Again, nothing financially relevant, but I think there's some people that seem to just be idea prone and, are always looking for ways to do things. And for me, it's fun. When I was speed skating on the national training team in Calgary and going to college there, I was doing an internship in the summer, and the CEO of that business said, hey, what do you think about XYZ? I said, well, let me go try to help kind of sell this insurance product to different people. And I'm out talking to people about different insurance products and so forth. And one of the people is an owner of this chiropractic clinic. And the guy that owns a chiropractic clinic says, how'd you get into my office? I said, well, I walked up to the front door and, let's just say the guy's name was Joseph. And I said, hello, ma'am, I'm here to meet with Joe. And, and she's like, well, how'd you know I go by Joe? And I said, I didn't. I just kind of took a guess. And she's like, did you say you had an appointment? I said, no. But I said, I kind of acted in a way that she might have felt that I had an appointment already set up with you or something like that, which I never said I did. Is I like that. I like that tenacity. I like that kind of getting out there and drive. I've got this business idea. And I said, well, it's kind of a cool idea. If you give me half of it, I'll build it for you and run it. And so I ended up starting this business with this guy and developing a website, learning to code in the late 90s and stuff when tech was booming, and building a website and built this local placement agency in the healthcare business. I ended up selling back to the guy because as it grew, he's like, well, this was really my idea, my baby. And I said, oh, I've got other ideas anyways. If you want to just kind of buy me one of my shares, great. So I did. Again, nothing financially relevant, but fun. Fun coming up with the name, fun building a website, fun being creative. And in investment banking, I actually really liked the creativity of it. I think there's so many, especially with financial institutions, there's so many ways to do things the right way, the wrong way, and so forth. And I find that quite creative and interesting. But I like principal investing. I like building things. I like people. I like investing in those type of things. And that's where Star Mountain is sort of a marriage of those things. And ultimately, when I was in investment banking, I saw an opportunity when I left with some colleagues to launch my first fund when I was 26 years old in 2004 to do private lending and private equity investing on behalf of different states in the US to help invest in women-owned, minority-owned businesses in underserved areas in the state as part of an economic development program. And that's how I was able to get that initial fund together and so forth. And the risk aspect you talk about was probably a little bit naive, was a part of it. But in fairness, I remember talking to some friends of mine. In fact, one of them is a senior partner at Apollo now. And I remember chatting with him and I said, hey, I've got this idea. He was already in private equity where a lot of investment bankers want to go. And I said, John, I'll call him John, I'm probably going to fail trying to start this. What do you think that's going to do to my recruitability? And he said, learning and failing, you'll probably learn as much as you will as another year in investment banking. And so part of the concept of it being risky is risk implies something to lose. I didn't really have much to lose. I didn't come from any money. I didn't have a lot of money. So there wasn't a lot to lose. Now, the probability of success was also not high. So, if you measure risk and potential loss, mine was low. I didn't have a lot to lose. If you think about risk as probability of success, well, the risk was really high because the probability of success was low. But thankfully, I pulled it off. And, it's interesting now, for 21 years, I've been a principal investor and lender in the lower middle market, which is actually as long as now most firms and more than many firms out there, which has been interesting, of just all the learning lessons through a lot of different cycles and businesses and so forth. But that was the way I built the business, and then rebranded and restructured and launched a new organization in 2010, trying to really take all the learnings I had and build a better business model with Star Mountain. And that included also, once again, taking risk. So I had business partners that didn't want to take as much operational risk as I did, which is totally fine. But I didn't have kids, wasn't married at the time. And so I could afford to take that risk from, again, the perspective of not a lot to lose. So I, started opening up our office in India, investing heavily in technology, because I said, look, this is the way of the future. We need offshore resources. We need technology and systems. And by the way, those investments in our management company really maybe worth zero. But I said, if, however, we could build this engine, this could be a phenomenal engine to be investing in and capitalizing on some of the great trends in the lower middle market. And thankfully, some skill, some luck, probably a lot of grit at minimum. We've been able to build a great business in Star Mountain, just having celebrated its 15-year history.
We talked about a couple of the sectors that you focus on or you touch on. Can you give us maybe a broader snapshot of the sectors you tend to invest in directly?
Sure. It starts again, RJ, with purposeful investing. So what are we trying to achieve? And then what's the data-driven way of best trying to achieve that? So one thing we want is to not lose money. We're not doing venture capital investing. You can look there and say, hey, I might make 50x, I might make zero. And then on a blended basis, I hope to make 2 or 3 times my money, or whatever the case is. Some will, of course, aspire for higher, but the probability isn't really there. I wanted to create a total return-driven strategy that gave us a high probability of landing in an attractive band of outcomes where I believe on our credit side, we can generate alpha over other credit, private equity generate alpha over it, and same thing with secondary. So first is delivering low market correlated returns, then overlaying that with alpha relative to the strategy. And so to do that, we don't invest in certain sectors. Like we don't invest in real estate. Real estate tends to be much more competitive, more cyclical, harder, and it's much more efficient of an asset class. When things are really efficient, it's harder to extract alpha. The energy sector, more broadly speaking, or commodities that tend to be more volatile, we also don't, right? I'm not saying those are bad investments. They're just different, right? Different relative to what we're trying to achieve. So then what are we left with? There are really businesses that are established, diversified, have recession resiliency built into them, such as your pet hotel, boarding, grooming. So business services, logistics, industrial, more like consumer durable type of things that people will buy and use, including in downturns, and businesses where we can find, really good data and information that says this business makes sense. It's adding real value. People want this. People need this. And I'd rather bet on the risk of operating it well. And that's where we then overlay with a very hands-on approach to investing. So you think about public markets, there's passive and active. In private markets, there's actually similar. There's some people that really make an investment, but then they're pretty passive unless there's a big problem. We're really active. We want to find great companies and help make them better. And I think that helps us attract some of the best business owners that say, well, I don't want just capital. I want a good partner. I want a good partner culturally. I want a good partner that's going to add real value to me. And that's how we try to really differentiate both in selecting the best business owners to work with us and then making them better. And then thankfully, it's become a little bit of a self-fulfilling prophecy because then you generate good results and that helps you track other great businesses and they help you generate good results again. And so we could probably let the flywheel almost run itself today, but we're always looking for better ways to improve and we always are.
We're coming up on time. I do have a few remaining questions. One is I noticed you are quite involved in a lot of different organizations. Have you always been that way? I presume there's a lot of benefits to being part of all these organizations.
I have in different ways. So starting with alma mater, and I really value education and try to be involved there. What I look for, RJ, are things that I can be involved in where it can add value to what I think of as my life, and Star Mountain is really all in one. So how can it add value to that? And how can that add value to this? So for example, I was on the board and now I'm a global advisor to the CEO of Harvard's Alumni Entrepreneurs because I didn't want to have the fiduciary obligation of going through financial statements and stuff like that on a quarterly basis, but I want to help and add value. So we at Star Mountain, our ecosystem can very easily add value to Harvard and graduates of Harvard that are building businesses and running businesses. But at the same time, we're learning, right? We're meeting great people, we're learning, and we're building relationships. So we want to tap into relationships for industry insights or finding great board members for companies, finding other executives, helping develop talent. That's a great place. Recently joining the board of the Foreign Policy Association. Again, it's not a governance focused thing. It's trying to add value. I think what they do in trying to unify the world and create understanding globally and stuff is a fantastic mission, especially with everything going on in the world today. And so that fits kind of our philanthropic desires, but it's also learning. It's learning from other people, recently sitting down and having dinner, with the delegates from China and said, what are you thinking? How are you thinking of US-China relationships? I mean, China is the second largest economy in the world. It's very consequential. I think it's important to be a great investor to understand the world. And even though we're investing in US-based businesses and to a lesser extent Canadian, we need to understand what's going on in the world. And even like venture capital, even though we don't invest in venture, if you have 20 people that all say, we're going to disrupt this industry, I'm not sure which one will, but chances are one of them will. And so I want to make sure we understand how that could positively or negatively impact other industries and businesses that we're investing in. So it's all one kind of aligned web and ecosystem. What I don't do is get involved in a whole bunch of disparate things that have no correlation to each other, nor other for-profit things, so that I stay highly aligned with my team, which is what I want them to be with me. And ultimately, the Star and Star Mountain, our North Star is always our investors. Mm-hmm. It's always being as highly aligned as possible. And we like to follow the Buffett value system, I call it, and alignment is certainly one of those.
Mm-hmm. Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Sure. One of them, Rob Kaplan, who has been really honored to meet. I remember when I did the owner, president, manager program at Harvard Business School, where we had about 150 CEOs from the world go and live on campus for 3 weeks at a time over the course of 3 years. And I remember early on him saying, how is your business solving a problem or problems? Question number one. Two is, how are you distinctly unique? If you can't answer these questions, you should really think about it. And then lastly, and Rob's got a lot of great books. He's back as the vice chairman of Goldman. He's incredibly talented in person with a lot of great data that I encourage all of you to look because he provides it for free, similar to Ray Dalio, but talks a lot about alignment. And again, just similar to like what I mentioned for Buffett. And so I think Rob's been a phenomenal influence and somebody that I'm happy to be able to build a relationship and friendship with over the years.
Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
When I moved to Greenwich with our family about 5 years ago is a YMCA. I think, the YMCA adds a lot of value to a lot of people, having grown up with parents as school teachers before my mom passed and my dad remained being a school teacher. You don't have a lot of money to be going to equinoxes and whatnot. So health and wellness, I think, is very important. Community is very important. And I love a lot of the things that the YMCA supports, often like different service kind of industry people, whether it's nurses, policemen, fire people, stuff like that, teachers that were helping their children with summer programs and whatnot. I think that a lot of these jobs don't get paid a lot of money, yet they're so incredibly valuable to society, to our children, to all of us. And so finding ways to give back and support them and be able to support their families through the YMCA is something that I think is very valuable for all of us.
And to round out this conversation, I mentioned that you were a medalist and that was in speed skating. You mentioned it during the conversation. Tell us a little bit about that. How did you get into the sport? Ultimately, where did you get to with the sport and what did it teach you?
My dad really liked the culture of speed skating. It's a culture and a community that, you're driven, you're passionate, but unlike hockey, which my kids play, and I play in a little adult hockey league now, I love as well. He liked the speed skating community better in this small Northern Canadian town than the hockey, which is a little bit more of an aggressive culture, I'll call it. And that just sort of fit him better. So he put me into speed skating when I was very young. The second thing that happened is when my mom passed away in the category of luck, and I don't know whether you call this luck or not, but it was really cold where I grew up. So there was a lot of ice. So it was easy to skate and cheap. You have some secondhand pair of skates. I remember I'd go to the high school where my dad was at and the outdoor running track, they just freeze it with the Zamboni in the winter, and that's your outdoor rink. Well, I could go skate for 2, 3, 4 hours every single day after school while I'm waiting for my dad to go to school. And so again, the good news, bad news, it's cold. And so I had a lot of opportunity to just train and put in a lot of hours. And lastly, growing up without much money, speed skating, probably not a surprise to you, RJ, doesn't have a lot of money in it. And so if I could win my local race, they'd have enough money for me to race for the province. If I won my province, for my age class, then they'd pay for me to go compete nationally. But if I was second, I could still go, but my family had to pay. Well, so that basically meant I either won or I didn't go, right? That was the math was pretty binary. And so it gave me a lot of drive, right? It was winning or nothing. And that allowed me to travel and see a bunch of things and meet a bunch of people. And my dad had put me in French immersion when I was young. And so being able to go over to Quebec and stuff and race and speak French with people was, just a pretty cool experience. So I think that gave me a good perspective. I think it gave me grit. And it also showed that if you put enough effort into things, you may not get everything you want in life, but you can get a lot of things. And you just got to get after it and do your best and train hard and have a plan. And I stopped racing for a lot of years, including when I worked on the oil rigs to pay for college for a year after high school. And then when I went back to Calgary, really said, hey, let me see if I can get back in and, try to make it to the 2002 Salt Lake City Olympics. And again, probably similar to start my biz idea, the probability is probably pretty low to make it, but let me get after it. And, started racing again and did well. And I made the national training team. And then I still had to bartend and work a little bit on the weekends to pay for life and, going to class full time, which I always sort of joke, say the good news of speed skating, there's no money. People say, what do you mean? I said, well, I didn't have all my eggs in one basket because I knew I needed a plan B. So I was going to college anyways. And unfortunately, I flipped my bike on the velodrome and, stopped racing speed skating then. And that's at the same time that I'd started this little company from that summer internship program. And I got really passionate and excited about business. And then when I moved to Montreal, I helped coach a speed skating club on the weekends while going to university there. So I never made it past a Canadian gold medalist, and I set a Canadian national record. And I guess internationally, I got a bronze medal as well at a North American championship. So not as far as like an Apollo Ono as somebody I admire and have met over the years, but had a lot of fun and was a nice contributor to my life.
Amazing. Brett, want to thank you again for taking the time. I really enjoyed the conversation.
Thanks, RJ. Appreciate it.